Good morning. Today is Thursday, December 19th. It's almost Christmas. I'm really excited. I hope everyone is preparing to spend some time with family, hanging out with the kids, brothers, sisters, all that good stuff. That's what Christmas is all about. It's about spending time with family and loved ones. I know that I'm looking forward to it. It's going to be a good time. Anyways, we're going to dive right in. So our top news stories for the day: everyone's favorite Fed chairman, Jerome Powell, cuts rates this week with a hawkish tone, sending waves throughout the markets. While the central bank is cutting rates, you have the shadow too big to fail banks like JP Morgan acknowledging the potential that Trump's new crypto policies could have on the world stage. And our final story: a Chinese car manufacturer quickly and quietly becomes the third largest Bitcoin miner in the world based on hash rate. We're going to jump straight in. Welcome to Channel 256 News. I'm your Bitcoin and Freedom Maxi host, Trevor Bello, and each day during the week, I will do my best to give you a brief overview of what is happening in the Bitcoin and crypto space. Now, I do want you guys to understand I have delineated between the two, between crypto and Bitcoin, and there's a reason for that. Crypto and Bitcoin are not the same thing, and they are often characterized as the same thing. So Bitcoin came first. Bitcoin is the only true crypto you should pay attention to. All the other cryptos don't really matter. But if you are a crypto trader, just understand that you're not going to get positive crypto takes from me. I am a Bitcoin maxi. I'm not one of the toxic Bitcoin maxis, but I mean, sometimes it feels like I should be, because all of y'all are out there getting wrecked with these crypto scams and meme coins that we've kind of started covering a little bit in the past. So, it is what it is. I'm your Bitcoin Maxi host. If you guys enjoy this, please leave a like, comment, and share it out to your friends. So as always, we're going to start with the mining metrics for December 19th. All right, so our block height today at the time of recording is 875,448. The total network hash rate is 774.9 exahash, and the daily hash value per petahash is $62.44. We hit the all-time high of $108,280 on December 17th. And we're currently sitting at about $102,100. So we have retraced a little bit. The last difficulty adjustment happened on December 15th. It was a 4.4% adjustment upwards. And our blocks to retarget are 1,512. The retarget date is December 29th, 2024. And right now it's estimated to be a 0.2% increase upwards. The last thing in our mining metrics is the fee environment. We're looking at about 6 sats per VByte. We're going to get right into criticizing the central bank, but before we do that, I have an important message from Bitcoin Mining World. Channel 256 News is proudly brought to you by Bitcoin Mining World. Bitcoin Mining World is more than just a mining equipment supplier. We are educators and realists. Our goal is to empower and uplift the next generation of Bitcoin miners. With your help, we can build a stronger and more resilient network through our training programs, boot camps, and our ever-expanding network of Bitcoin miners. We're helping to decentralize the network and build an ecosystem where everyone can thrive and succeed. When you make a purchase from Bitcoin Mining World, you are supporting our mission to empower and uplift miners just like yourself and create a more resilient network for all. Let's mine the future together. Our first story. On December 18th, 2024, yesterday, the Federal Reserve reduced its benchmark interest rate by 25 basis points, bringing it to a range of 4.25% to 4.5%. This marks the third rate cut of the year, aiming to balance the economic growth with inflation control. Notably, the Fed signaled a more cautious approach for 2025, projecting only 2 additional quarter-point reductions, a decrease from the 4 cuts previously anticipated. In response to the Fed's announcement, financial markets experienced significant volatility. The Dow Jones Industrial Average plummeted over 1,100 points, marking its most substantial decline since August and extending a 10-day losing streak, the longest since 1974. Similarly, the S&P 500 and NASDAQ suffered notable losses, reflecting investor concerns over the Fed's revised outlook. The cryptocurrency markets were not immune to these developments. Bitcoin's price fell below 104,000, influenced by the Fed's hawkish tone and broader market apprehensions. Additionally, discussions surrounding a potential strategic Bitcoin reserve were dismissed by Fed Chair Jerome Powell, contributing to the cryptocurrency's decline. Fed Chair Powell emphasized the necessity of continued vigilance in combating inflation, which remains above the 2% target at 2.7. He highlighted the importance of achieving further progress on inflation before considering additional rate cuts, underscoring the Fed's commitment to its dual mandate of promoting maximum employment and price stability. These developments underscore the intricate balance the Federal Reserve seeks to maintain between fostering economic growth and controlling inflation, with significant implications for both traditional financial markets and emerging sectors like cryptocurrencies. So this is my take on it. I mean, really, why do we even need a central bank? Price controls and rate cuts and even increases stifle economic growth and put more pressure on the economy. I, for one, am completely against central banks and wish that we could tear them down. Unfortunately, we do live in fiat society, and that kind of means that at this moment we have to deal with the likes of Jerome Powell sticking their hand into the proverbial cookie jar. I'd like to think that we could live in a world without central banks and income taxes and stuff like that. It wasn't until 1913 that they even instituted the Federal Reserve as a central bank. And if you read the book, The Creature from Jekyll Island, you'll kind of realize that the Federal Reserve is neither federal nor a reserve. So it's just an interesting thing to think about. And kind of going back to my point is like, why do we even need central banks? Why do we need somebody coming in and controlling markets, stifling innovation? You know, also something I want to look at is this whole idea of 2.7% inflation and targeting 2%. They're targeting 2% based on CPI metric numbers, which they can change and has no real basis on what you and I are experiencing in the world today. You can you can calculate your interest rate, the rate of inflation, the interest hike that you're dealing with right now, just simply by looking at the products that you buy, the goods and services that you buy in the market, and how much those have gone up in price and how much they've decreased in quality. That's kind of a good way to find the basis for your inflation rate instead of listening to the Fed and their CPI numbers, which are completely inflated, completely skewed to what they want. I mean, if they wanted to pull coffee, like if they wanted to pull your morning coffee out of the CPI numbers, they just pull it out. And, you know, it's no longer part of the CPI inflation, and they can reduce it from 2.7% down to 2.4% or something along those lines. You know, we all know it's a lie. It's really disgusting is what it is. Yeah, these are all just more reasons why I think that we don't really need an institution with the power to issue money and the power to change the CPI numbers. It's really just corruption all the way up and corruption all the way down. Channel 256 News is brought to you by the MasterMINED Club. January is for the heat punks at MasterMINED Club, and I'm super excited about this. I am a heat punk. I'm a Bitcoin maxi, but I love to be able to reuse heat for my home and for my studio here. So you're going to learn how to mine Bitcoin at home and put that generated heat to good use. As Tyler Stevens would say it, heat is a product, not a problem. So on January 10th at 10 a.m. Central, Ryan Ramminger from CryoBite Labs will discuss the CryoBlock, a revolutionary hybrid cooling system that's more efficient and more affordable than immersion and hydro systems. On January 24th at 10 a.m. Central, Tyler Stevens will join us to explain why heat is a product and not a problem. So again, I'm super excited about this. It's going to be a great month, January. Don't miss out on these opportunities to learn from some of the best people in the space. Join us on the 10th and the 24th to discover the benefits of hash rate heating. The links will be in the show notes. The recent re-election of President Donald Trump has significantly impacted the cryptocurrency landscape in the United States. His administration's pro-crypto stance is ushering in a new era for digital assets, with major financial institutions like JP Morgan acknowledging the transformative potential of these policy shifts. President Trump's administration has signaled a commitment to integrating cryptocurrencies into the mainstream financial system. This includes appointing crypto-friendly officials to key regulatory positions and proposing the creation of a strategic national Bitcoin reserve. Such initiatives have bolstered investor confidence, contributing to Bitcoin's price surpassing $100,000 for the first time. Financial giants like BlackRock and Fidelity have launched Bitcoin ETFs, providing investors with more accessible avenues to gain exposure to digital assets. This institutional adoption has been a significant factor in Bitcoin's recent price surge. The administration's approach includes potential tax policy changes favoring crypto investments and efforts to reduce regulatory hurdles for crypto native businesses. While these developments are poised to further integrate cryptocurrencies into the US financial system, they also raise questions about market volatility and the need for robust regulatory frameworks to ensure stability and protect investors. In summary, the Trump administration's policies are catalyzing significant changes in the US cryptocurrency markets, with major financial institutions and investors closely monitoring the evolving landscape. So my first take is that, as a Bitcoin maxi, don't buy the ETFs. Take custody of your Bitcoin. If it were me, I would take full custody of my Bitcoin and pull it off of the exchanges and not buy an exchange traded fund where I'm only exposed to the Bitcoin price. I don't actually get to experience the Bitcoin price increase. Anyways, I am more hopeful that with a regulatory framework around cryptocurrencies in the United States, this will protect investors, protect people who are normies out there who are getting wrecked by this cryptocurrency meme coin casino. I do want to highlight that the Trump administration and a lot of people don't really distinguish between Bitcoin and crypto. And that's partially because everybody has to do their own 1,000 hours and educate themselves. So I do hope that somewhere along the way, Donald Trump and his administration kind of start to distinguish between the two once they realize that Bitcoin has merit and cryptos really don't. Taking a 1,000-foot view on the entire situation, the frameworks that are being built out, I'm really hopeful. I'm really hopeful that we see some change during this administration, some change that is well needed and will keep people from getting destroyed by these shitcoins and these meme tokens. Also, I really hope that Bitcoin takes center stage in this fiat world and begins to make necessary changes so that we can get back to a world where people are judged based on the energy and the work that they put into society instead of just, the ability to create money from nothing. That's, I really hope that with this administration comes a lot of change, draining the swamp, for lack of a better phrase. Have you guys been watching the price of Bitcoin take off, wondering whether or not you should get involved? Well, we have plenty of opportunities for you to do that if that is what you want to do. We have several turnkey, ready to go Bitcoin mining sites for sale in the US. We have sites in Oregon, Texas, Louisiana, Pennsylvania, Kentucky, and more. Everything from 0.5 megawatts all the way up to 200 megawatts. Check out our YouTube or reach out to our head of business development, Yannick, to find out more. Links will be in the show notes. For our final story of the day, Congo Inc., a Chinese automotive services company listed on the NYSE, has quietly emerged as a major player in the Bitcoin mining space, acquiring 32 exahashes per second worth of Antminer mining rigs. This makes Congo the third largest publicly listed Bitcoin miner by hash rate, trailing only behind industry leaders. The pivot represents a strategic shift for the company as it seeks to diversify revenue streams and capitalize on profitability of digital assets. Congo's significant investment in high-performance mining equipment highlights the growing appeal of cryptocurrency mining as a lucrative enterprise for traditional businesses. While this move diversifies Congo's operations, it brings challenges such as navigating energy concerns, regulatory scrutiny, and Bitcoin market volatility. Nonetheless, the transformation underscores the increasing convergence between traditional industries and the cryptocurrency ecosystem. Congo's evolution into a Bitcoin mining powerhouse reflects the expanding institutional interest in blockchain technology, demonstrating how legacy companies are finding opportunities within the rapidly evolving digital asset space. This is something that I think we're going to see a lot more of as companies with excess power begin to realize that they can capitalize on that excess power with mining. I believe they're going to start making the shift. Obviously, Bitcoin mining isn't for everyone, and it is a very competitive market, but some people are going to come to the space and they're going to thrive, and other people are going to come to the space and they're going to bail. And that's just what we need in a free and open market. I have a podcast with a guy, Owen Davis, today. He is a Bitcoin miner and engineer working for Just for Crypto, and they actually did the very same thing. Originally, they were a t-shirt shop and a dance studio, And one of the guys there realized that, we have all this excess energy. What if we started mining Bitcoin with it? And what started as one rig slowly kind of developed into them having 20 megawatts under capacity. So this is just me kind of highlighting how companies with excess power or access to stranded energy will start to utilize that. You're seeing it with flared gas sites. You've got this flare stack that originally couldn't be monetized. They'd have to evacuate it into the atmosphere or burn it. And now they can just throw a generator on top of it, burn that fuel, which is reducing hydrocarbons into the air. Also mining Bitcoin. You see this with methane mitigation sites at landfills, and even people who are mining Bitcoin with cow shit. It's interesting, and this push towards Bitcoin mining is shoving us very, very close to that 1 zettahash range. Bitcoin mining is flourishing. It's a very competitive market, and it's only increasing in competitiveness. And every 4 years, your revenues are being cut in half. So it's not for the faint of heart. But if you are able to capitalize on some stranded energy, some excess energy, Bitcoin mining might be for you. That is all for today's news broadcast. Thank you for tuning in to Channel 256 News. This broadcast was brought to you by Bitcoin Mining World and the MasterMINED Club. If you liked what you saw, please leave a comment, like, and subscribe for more content. I'm your host, Trevor Bello, and I'll see you tomorrow for another news update. Until then, remember to stay grounded, keep educating yourself, and constantly grow. A quick reminder that Channel 256 News is for education and information purposes, and nothing should be construed as investment advice. All opinions are my own and not those of Bitcoin Mining World or its affiliates. Please do your own research and speak to a professional before making any investment decisions.